So a number of countries on the continent, including Kenya, Egypt, Zimbabwe, Nigeria, Ghana and Zambia, are experiencing a shortage of US dollars, and most of these nations rely on the American currency for major transactions. We're now joined by Lebohang Pheko, a political economist, to take a look at some of the reasons and what opportunities this presents. Thank you very much, ma'am, for your time this afternoon. Perhaps a brief background in terms of what we should understand about the situation. Lebohang, hi, it's Dudu. Are you with us?
I am here. Just keeps cutting out. My apology.
No.
We have load shedding in my area. So basically, your question was around the background of the dollarization of many African economies. Did I catch you correctly?
Yeah, the shortage of these dollars. What has led to it?
Well, I mean, many things. So one is that in order to, most of the purchases that take place really take place in dollars US internationally. And many of the loans that are taken by especially majority world developing countries from the IMF and the World Bank by default have been in dollars. So as a result of this, as economies become sluggish and have been sluggish, particularly over the past 3 years, what this means is that there has been less of an inflow of dollars in foreign reserve, and also that there's been a higher indebtedness. There's been a higher rate of payment to international agencies such as your IMF. It doesn't help also that, of course, as we're aware, petrol and fuel are also bought in dollars, and as a result as well of the Iranian also a bit of a paucity in currency in general, and including the levels of trade that have been taking place. So our growth figures, for the most part, across many African countries, have been lower than anticipated. But I mean, as they are, it is as it can be expected, particularly in economies that are trying to recover from a very strange 3.5 years. And I think the problem, of course, with that is that the main default and the currency of reserve for the last at least 40 years has been dollar US, as opposed to a multiple basket of other available currencies.
Speaking of a multiple basket of other available currency, there are talks in the global south, at least, that they will be or eventually looking at the de-dollarization or de-dollarizing, especially on the continent. But yesterday we also heard or saw reports from Emmanuel Macron, the French president, saying that Europe needs to move away from its reliance of the US dollar. So what opportunities does that present?
So remember that the BRICS nations, for example, have been trying for a long time, and I think those conversations are accelerating finally, which is quite useful, to move away from dollarization and exploring an alternative currency. This comes off the back of many years that as SADC, we have been talking about having our own common currency for many years. That was supposed to come into place in 2018. Clearly, we're about 5 years off the mark, and I think given the conversations that are now preeminent around the BRICS currency, it looks as though those conversations are on the shelf. But certainly these are not, the whole idea of delinking or devolving away from the hegemony of the dollar US is not new, but I think the momentum is very high. Remember also that this comes at a time when, for example, for the first time in ever right now, the greatest number of the highest foreign currency in the Chinese market is the Russian ruble, which is obviously causing some geopolitical skirmish. Countries like Turkey are talking about de-dollarizing, Bolivia, Venezuela, Brazil, as we know, and of course we here in South Africa. The European Union, as you rightly say, have long been very concerned about the growing ascendancy of the ascendancy of the dollar US as the default global currency of tender and the global currency of reserve. That's also to do, of course, with their own geopolitical rivalry and competitiveness. But I do think that it creates very useful momentum for the rest of the world.
On the continent, at least, how do we see this playing out? You mentioned there's been talks in SADC, at least, to create a common currency. But how will it exactly work?
That's a really interesting question, and we don't really have those answers. I think the only sort of example or the exemplar that we can think of is the West African CEDAW, and or the CFA, depending on whether the French-speaking countries call it the CFA, and what this really means is then that they have been able to they've been able to build a common market and a common customs union. They've also been able to do much deeper integration than the SADC, for example. As you know, they don't use passports amongst themselves. They use an ID document, for example, to cross their own borders. So the only challenge with that, I would say, is that, that is actually essentially formerly was pegged to the French franc. So we wouldn't want that. We would want a sovereign currency which is backed by our own minerals and resources and the sentiment on the continent, which we have. So remember that in South Africa, we are the highest gold-producing country in the world, for example. So perhaps there is a leverage for us to insist again that we go back to what was originally global practice in the 1970s, which was removed by Richard Nixon, which would be to revert to gold prices rather than the US dollar as the instrument of tender. So remember that in the 1970s, before the whole oil crisis hit, there was actually usually, most currencies were converted into gold to make it much easier for more currencies and more countries to access markets. And then, of course, under Nixon, they decided that they just couldn't be bothered with the admin of converting back to gold. So, I mean, we do have a case study in the CFA in West Africa, but I do think that we would need, if I may put it bluntly, a more decolonized, much more sovereign version of that. And we also need to go back to what the SADC was trying to achieve. So, I mean, the SADC already the customs union as moribund as it has been over the last few years. So again, there's already traction. If we understand that, for example, across Southern Africa, the rands, the pula, the maluti, and so forth are almost at par. So you can. The problem is that there's a lack of reciprocity. So we as South Africans can go to Botswana, Namibia, Swaziland, Lesotho, and spend our rands. We don't need to. We don't need to change our currency, which would give those economies some much needed revenue. But when they come here, they of course cannot use their maluti and so forth. So we need to think around much more generous at South Africa as the big sister, as it were, of the region, to then begin to have a much more unified approach to how we begin to think about rationalizing our currency flows.
There are countries that are bothered with the admin that comes with gold. And if that Al Jazeera documentary is anything to go by, it would appear that Dubai is one such country. So what happens where countries on the continent, for instance, as that documentary shows, that we keep bleeding, right, be it gold or be it through illicit financial outflows? How important is it that before we even want to have these conversations, that we get those checks and balances in place? So already there's an argument to be made that, well, this is not benefiting the everyday African, the current system that we have anyway. So what more when we want to think of de-dollarization and playing in that space?
So interesting question. So, if we think around what the logic is of de-dollarization, for example, and the common currency and the trends that I suppose other countries and other regions are also talking about. So the India and the United Arab Emirates, as you rightly say, they are already in talks about using the rupees to trade non-oil commodities to shift away. Saudi Arabia, which has been a long ally of the U.S., as we know, has said that they're now finally open to trading in currencies besides the U.S. dollar. The checks and balances are many and they're myriad, and we probably don't have the time to talk about them right now. But we do need to think around, firstly, illicit financial flows, which remain an issue, not so much because the African continent and African countries don't have good systems, but also because, many the Euro-US and Asian markets are also extremely coercive as well, and you should always remember that these flows flow direction. There's also the questions of supply and demand. So international finance governance becomes very important. I think the other point is the role of reserve banks, and as we know that in my view, we have a reserve bank that's a bit shy of coming to the fore in these sorts of matters, who feel that their role is primarily financial and monetary policy, fiscal policy, to keep interest rates bobbing at a particular pace, to ensure that inflation is kept down, but they don't have a very interventionist approach. I do think that the Reserve Bank, if our Reserve Banks had a much more interventionist approach as well, we might be able to then begin to think around how currency flows are moving within the continent, how those flows are accounted for. A much more rigorous taxation system to enable every cent and dollar, naira, shilling, rand, pula that comes in and out of the continent to be accounted for, no matter what currency we are speaking of. So, I think you raise an interesting point, because this becomes an academic conversation unless we are able to deal with some of the excesses and the failures of current currency flows within the continent and from the continent out to the rest of the world, and vice versa. We also don't want, as African countries, to become basically a money laundering scam for other countries. And unfortunately, there is quite a bit of illicit or grey money circulating on this continent.
Thank you very much for your time this afternoon. Lebohang Pheko is a political economist.